71.53, effectively extending its rally for a fourth day today, bringing weekly gain at 0.6%. This, of course, as the central bank keeps monetary policy loose to spur economic rebound here. However, it did raise inflation forecast this year all through 2023. For 2021, they're pegging inflation to come in at 4.4%. However, they are expecting that to ease next year to 3.3%. Looking at our leaders and laggards today, our advancers, of course, beating decliners today with only 5 blue chips in the red here. AC Energy leading gains here, up 4.7%. Not far behind is Converge, also ending the day in the positive territory, up 4.3%. Quite a number of stocks here gaining at least 2% today. You have Pure Gold, Robinson's Land, and even BDO. On the other end of the spectrum, you have Avoidance Equity Ventures leading decliners down 2.2%. But you see, there's more exciting news outside the main index here. For one, let's talk about Apollo Global. The stock rallying for a second day today after it purchased a 49% stake in a Singaporean firm that owns a deep sea mining ship. That venture will be used for offshore activities of Apollo Global. Acquisition price is going to be at 711.98 million pesos. That pushed the stock higher by 11% today, bringing their two-day gain to at least 20%. As you can see right here, the stock is now at 112 cents a share. Lastly, let's have a check at Premier Horizon. What's the news here with Premier Horizon? Where they are on exploratory talks for a possible venture with Benga Corporation. That's going to be for a gaming platform in the play-to-earn category. Now, this as they explore opportunities in tech to complement their existing offerings, the agreement is going to be finalized after due diligence, according to the firm. Premier Horizon subsidiary will be joining the venture, is going to take 70% of that offering. Benga, on the other hand, will have 30% of the venture. Again, to give you an idea, Benga has a portfolio of more than 300 games that includes platforms with players competing against other players or by themselves, with winners often rewarded even via digital currency or cryptocurrency. Again, you have a Premier Horizon today rising 3% to 1 pesos and 4 centavos a share. And lastly, of course, we've already reported this morning, but you have All Day Mart at least getting a clearance from the SEC for their IPO. So that's going to be for 6.9 billion primary common shares at 80 centavos a piece. Over allotment option also at 685.7 million common shares. That IPO is expected to raise as much as 530.5 million pesos. For the proceeds, bulk of that is going to be used to pay old bank loans at 77.5%. The remaining will be used for capex to cover their network expansion. The stock, or at least All Day Market, will be listed as All D by November 3 should it complete its IPO by October 25. Here are other headlines we're keeping our eyes on. The health department says that although the rise in COVID-19 cases is slowing down in Metro Manila, there's still a continuous uptrend in the rest of Luzon. The DOH is also warning residents of NCR that they cannot conclusively say that the COVID-19 situation is now improving, as the recent decrease in reproduction number and growth rate may have been caused by the 5% decline in testing output. The agency is still investigating the reason for this decline. Meanwhile, infections in areas of Luzon outside Metro Manila are still increasing, while cases in Visayas and Mindanao have plateaued. The DOH adds that despite a slow downturn in cases in NCR, there's no assurance that the capital will see a downgrade to alert level 3. Health officials project that active cases in the country will reach 58,000 by the end of the month. Now, Manila was among the lowest ranked in a top 100 list of emerging global startup ecosystems. The Global Startup Ecosystem Report, published by research organization Startup Genome, puts Manila in the 91 to 100 level this year, That's a drop from the 31 to 40 level last year. Manila's performance as emerging startup ecosystem obtained scores of 1 out of 10 in performance and funding, 2 in market reach, and 6 in talent. Trade Secretary Mon Lopez said the government will work to improve the country's performance by maximizing the utilization and effectiveness of the Startup Venture Fund. In Asia, Manila ranked in the top 10 and top 20 in the world for affordable talent. The Philippine capital's strengths are in financial technology and e-commerce. And the ERC reports that distribution utilities and electric cooperatives have refunded more than 20 billion pesos to consumers, leading to lower power rates since last year. The ERC said it ordered the refunds after noting the overcollection of pass-through and distribution charges, which comprised bulk of the 20 billion pesos. The refunds also included market transaction fee refunds and discounts granted to customers. The ERC is now urging distribution utilities to show empathy to consumers by offering flexible payment options, including a staggered payment scheme with no penalties or interest. And the Philippine Retailers Association is cautioning against the bill that seeks to lower the minimum investment hurdle for foreign retailers, saying it may damage many local small businesses. Both the Senate and House of Representatives have already adopted the bicameral report on the conflicting provisions on the amendments to the 20-year-old retail trade liberalization law. The bill will now be forwarded to Malacanang for President Duterte's signature. Under the reconciled version, the minimum investment for retailers is now set at 25 million pesos with a per-store requirement of 10 million pesos. In the existing law, the paid-up capital requirement for foreign retailers is pegged at 125 million pesos. PRA Vice Chairman Roberto Claudio said the 25 million peso minimum investment is too low and may just damage MSMEs. He said that amount will mean that the economy will not gain substantial foreign investments. Now, to respond to those fears raised by the local retail sector, we have on the show a member of the Bicameral Conference Committee working on the amendments to the Retail Trade Liberalization Law, Marikina City Representative Stella Quimbo. Good afternoon, Representative Quimbo.
Good afternoon, Jes.
All right, so the competition to ensue from the lowering of investment requirements for foreign retailers is seen to hurt at least local small businesses. How do you respond to that? And are there safeguards here for MSMEs?
I personally looked at the data. So the Philippine Statistics Authority has an annual survey of business and industry. And based on what I saw, about the more than 90% or perhaps all MSMEs, micro and small establishments, and by that we mean 20 employees, would have assets of about 40 to 50 million pesos, right? So, meaning to say, if you set the minimum paid up capital at 25 million and the 10M per store, and the average number of stores is 10, so you're looking at a retailer that has to bring in about 70 million pesos. So with that, then all micro and small are actually practical, given that their asset value is somewhere between 40 to 50 million pesos. So what we're saying is retailers who come in with an average number of stores equal to 7, and therefore a 70 million minimum requirement, will practically not compete with a micro and smaller segment. So in other words, our sari-sari stores will be operating in a separate market as these new retailers that would come in.
So you at least do not expect these foreign retailers to eat up on whatever possible earnings for most of the MSMEs.
No, actually, so the ones that will come in are way too big, such that they will not compete with the smaller ones. Meaning to say, when you talk to, for example, convenience stores, what they say is that, you know what, our toughest competitor is the sari-sari store, because the
Mhm.
sari-sari store does not pay minimum wages. Their utility expenses are way lower compared to theirs, and therefore they can sell actually at a lower price compared to, let's say, convenience stores. So that's what I mean. The sari-sari store is a completely different market compared to the convenience stores and the bigger ones.
Mhm.
And with the threshold that we put in fact, the retailers will actually be even bigger than the existing convenience stores at the moment.
And explain to us how you came up with that threshold. 25 million minimum paid up capital. The House version, of course, started with a 10 million peso proposal. For the Senate, that is 50 million pesos. How did you come up with this middle ground?
So yes, at first we really were looking at how it is in other ASEAN countries. For example, in the case of Vietnam, the minimum is just 500,000 pesos. In the case of Thailand, I think it's 5 million. In the case of Indonesia, it's about 8.75 million pesos. So when you talk about opening up the Philippine market, you really have to think about competing against these countries. So if your minimum get paid up capital is way much higher compared to these three countries, wala pa dyan yung Cambodia, which is clearly also a potential competitor. Uh, you need to think about calibrating that amount
Mhm.
relative to these countries, right? You
Mhm.
cannot outprice yourself too much, because if the threshold is too high, then you'll just lose out to these countries, and will not be able to you will not be able to open up your country anyway, right? So
Mhm.
pointless, in short,
Mhm.
yung law. And so again, looking at the data, it would seem like the sweet spot is really around that, with an average number of stores of 7, and that data came from DTI. We look for the per store amount that will hit more or less that range, 50 to 70 million pesos. And that would ensure that all our micro and small will have asset values lower than that.
Mhm. But given the
So
data
that,
that
that
you
was
mentioned
that was the
earlier,
technical determination. Yeah.
But given the data that you mentioned earlier as to the minimum paid up capital required in most of our Southeast Asian neighbors, 25 million pesos is still quite high. How do you expect to compete?
Exactly. So uh at the end of the day, of course, it was balancing all of these interests. If again, the position of the house was to keep it at how much, 10 million pesos,
Mhm.
so right at the range of Indonesia. But then the Senate version was much higher compared to our version, and on top of that, we did not have a per store requirement. The Senate version
Mhm.
had. But of course, the bicameral committee, of course, had to reconcile these two different versions. So that was sort of the compromise. And
So,
so, again, looking at the data, at the average number of stores equal to 7, and the asset size of the biggest
right.
small
Mhm.
has an asset size of 50M, then
Mhm.
we thought setting it at 10M per store is probably a good middle ground.
So, given that, do you really expect these amendments to at least boost foreign investments?
Well, I'm very hopeful, because at least it's uh, much lower compared to
What you had
the
before?
current law. Yes, what we had, which only brought in how many? I think just 43 new foreign retailers in a span of 19 years, and generating only 22,000 jobs. So I'm
Mhm.
quite optimistic that with a much lower threshold, that we would be able to outdo those numbers.
Mhm. But
And
the
of
timing
course,
is
we also have to compete in other aspects. For example, if, for example, the fact that our many of our workers in the retail sector, for example, speak English,
mhm.
and things like those. I think that will also count a lot in terms of comparative advantage.
But the timing is also curious. We really expect investments to pour in at a time where we're basically still in the middle of a pandemic, and you have rates still higher compared to our neighbors.
Yes. That's true. In fact, if I were a foreigner wanting to enter the Philippines, the first thing that I would check is really the COVID situation more
Mm,
than the minimum paid up capital. So you're
mm,
right. It's really, uh, it's perhaps not the most important consideration at this point.
mm.
But the pandemic will end at a certain point, so it's good to be
Okay.
ready.
Mm,
Meanwhile, of course, we have to think about providing a sufficient COVID response, which we're actually doing at the moment. Congress is deliberating the 2022 General Appropriations Bill, so that's a national budget. And listening to all the plenary debates, that's the theme. How much must we spend in order to quicken economic recovery and make the business environment more competitive and more attractive to foreign investors.
Okay, do we have any specific timeline here for the passage of the measure? We do understand it's already in the president's table, or are there any word as to when he's going to sign the measure, the amendments rather?
So we've on our end we're done. So we just need, I think, 30 days is I think the amount of time needed for the president to approve or veto. And but then since this has always been on his list of urgent measures, I'm very optimistic that it's going to be approved.
All right. Of course, the hope is that it would somehow help the economy bounce back from the pandemic. Thank you very much for your time this afternoon, Marikina City Representative Stella Quimbo.
Thank you.
And those are the biggest stories this trading day, September 24th, 2021. Catch Business World Live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe. Philippines, have a great weekend.